It's easy to get lost in the chart, more especially when you don't have any knowledge about what you're doing in the forex market. The forex market can be daunting. It's made a lot of traders blow their accounts. People want to learn to trade it, but it's hard because no one knows exactly how this market works. But the professionals do have an edge as to how to approach the market. Now, in this video, I'll show you how I will be approaching a currency pair. The currency pair we'll be talking about in today's analysis is inspired by one of you guys that wanted me to break down USD JPY. So we're going to be talking about USD JPY, and this session is going to be different from the previous ones. I'm going to tweak it in a way to focus mainly on this currency pair. We're not going to be going through a lot of the currency pairs on our chart. We're just only going to be focused on USD JPY. And the reason is because I want to show you guys what it means to look at the currency pair and not get daunted by the charts, the candlesticks you've seen, and mostly not to be afraid of trading them just because you don't know how to trade them. Now, I am of the opinion that every trader should have a watch list. At least that watch list should be your most favorite traded pairs. So it could be a watch list of maybe 3 to 5 currency pairs that you frequently trade. But at the same time, if you know how to trade, like you know price action to its T, and you know how to apply the rules of price action into every currency pair, you will not have to be limited with just one currency or the other. So in this video, I'm going to be talking about USDJPY. USDJPY is a major currency pair. It's mostly traded. I'm not going to have an issue talking about it, although I don't trade it all the time, but because I want to give back to my community, I want to give back to you guys so that you guys can stop doing the wrong things in the charts, blowing your accounts and trading in the wrong direction, and see exactly what the market is truly doing before you jump into your trades. That's the best way to trade. If you have any currency pair that you want me to dissect or to analyze, just drop it in the comments and I'll be willing to do that. Now, let's go. Now, this is USDJPY. Now, what you do first of all, I'm going to say it. What you do first of all is to zoom out. The key is zooming out, guys. Zoom out to the monthly time frame. When you start from the monthly time frame, you can see exactly what the market is doing from the higher time frame perspective. Now, when you zoom out to the monthly time frame, you can tell exactly what the market is doing in terms of its directional movement. So in this case, all I want to do on the monthly time frame is to know what this market is doing. Is it trending or is it ranging? Now, if you look here closely, you can see that this market was in this zone right about here. We had this zone right about here, and the market dwelt around this zone. So the approach I'll be taking to this video is to make everyone understand what this market is truly doing. So all beginners, you're welcome to this video. Now, the market was initially doing this before it broke out of here. Now, I want to point something to you guys. Now, see exactly what the market was doing. The market on the monthly time frame was creating a chart pattern. So in this case, this is the chart pattern. This was the head. So in this case, I'll just put this as the head. So this is the right shoulder. So the market created this and then broke out. So classically, this is an inverse head and shoulder that formed on USD JPY that has now seen USD JPY to the upside, because an inverse head and shoulder is a bullish reversal pattern. So all this while the market was just ranging. Chart patterns are ranges. So when you understand that chart patterns are ranges, you understand how to trade them. You know how to apply patience to wait for the breakout before you go. So simply, this market had an inverse head and shoulder on the monthly time frame and then broke out. So the break has occasioned the movement to the upside. That's the key to show you what exactly USDJPY is doing. USDJPY has begun to move to the upside. So we are bullish on USDJPY. Another clue to show you guys exactly why we are bullish on USDJPY is we've got a trend line right about here. So if I draw this trend line like this, you can see clearly that we are moving to the upside. The market is making clear-cut characteristics of a bullish market. So we have the higher high and higher low. So this is a higher high, this is potentially a higher low. This is also a higher high, and this is also a higher low. And the market has made another higher high. So we are in a bullish trend for USDJPY. Now, we do have two types of biases when it comes to every currency pair. We have what we call the long-term bias and the medium-term bias. So the market can be long-term bullish or bearish, but medium-term it can be something else. So in case it's bullish long-term, in medium time, it might just be retracing. So in medium time, it can be bearish. So in medium time, it can be moving sideways. So that's how the market is. So you just picture it like the high time frame tells you everything that is happening in that currency pair in terms of the direction of the market. Now, within the monthly time frame, because this monthly time frame is huge. You don't trade on the monthly time frame. You only just come to see the direction of the market on the monthly time frame. Now, what you now do with the information you get from the monthly time frame is what will help you to fine-tune your trades in the lower time frame, that means in your entry time frame. So in this case, we have come to see what the market is doing on the monthly time frame. We have seen that the market is moving to the upside. So we are long-term bullish. However, we might be something else in the medium term. And how do we know this? We only know this when we go to the lower time frames. So the first time frame I want you guys to know that we begin our analysis from is the monthly time frame. And I've just shown you clearly that long term, the overall bias for USD JPY is bullish. You can write that down now so you know that. Could just proceed it. So let's go over to the weekly time frame window. So we know exactly where the market is going in the monthly time frame. Now let's head over to the weekly time frame. What we do now, guys, on the weekly time frame is this. On the weekly time frame, we want to see whether there is any chart pattern or we plot our levels. So those are the two things we do on the weekly time frame. We want to arrange our charts so that we know where the market is moving from one level to the other. So in this case, we want to have our levels plotted out, our zones marked out, and know how to take our trades accordingly. Because the best way to trade is to trade from zone to zone. So when you're trading from one zone to the next zone, you are playing along with the market. These are basic tips for trading. And if you don't know this, then you have been doing the wrong thing all along. So you're learning it here that trading is best done when you are aiming from one zone to the next. That's why the popular saying goes, the trend is your friend. When you trade with the trend, you trade better. When you are trading in a ranging or a sideways market, you stand the risk of having multiple losses. So quickly, this is the weekly time frame. So on the weekly time frame, let us see exactly what's happening on the weekly time frame. We'll plot our levels now. So we've plotted the first level right about here. I'll just clone it. So we'll clone this. We'll find the next zone. Ideally, this should be the next. Okay, actually, this is the next zone. And the next zone is right about here. Clone it. We just clone it. So this is a feature in TradingView that enables you to clone your levels, so you don't have to repeat the process of drawing the exact dimensions of your levels and not make the right trading decisions. So you just clone all these and then mark it out like so. Now, we've also got this level right about here. Now you can see that I've clearly marked these levels out, and it's easy to mark them out like this. It doesn't take a thing to mark your levels out. And the only way to do this is I have videos on how to actually plot these levels correctly. And if you want to see how to exactly trade this the way I do it and plot these levels correctly, you can see how I'm going gradually, step by step, to show you how to analyze a pair. You first of all start from the monthly time frame, and then you come over to the weekly time frame to plot your levels. Now, the best way to plot these levels is what I teach in my free Forex masterclass. The link is in the description. If you want to learn how to trade like this, so you don't have to go and burn yourself out in a lot of trading failures, and before you know it, you give up. I don't want that for you. So I want the best trading experience for you. Head on now to the description. At the end of this video, actually, go to the description and sign up for the masterclass. It's free, and then you learn how to trade properly. So let's get back into this chart. So now we've got our levels plotted out nicely. The next thing we want to do is we've established that the main chart pattern which we saw was on the higher time frame. That was on monthly time frame. The weekly time frame now is also showing us some kind of pattern. Now, if you look here closely, we've got a weekly level right about here as well. So we've got a level right about here. I'm just going to arrange it properly. So we've got this level right about here. Remember what I told you guys, that we trade from zone to zone. So quickly, when I just go over to the monthly time frame, you can see that after we broke above this zone here, so I just bring out my tool. So after we broke above this zone here, the next zone was here. The market got here. The market played around and eventually broke this zone to get to the next zone, which is right about here. And ever since then, the market has been ranging. This is what I mean, clear cut, what the range means. So the market is just moving sideways. So this is a sideways market. And I'm going to designate it with this so that you know exactly what I'm saying, that this is a sideways market. So this is a sideways market because the market is neither making high highs or high lows. It's just moving from one side to the next. Now, medium term, we've seen that medium term, we are ranging. Your entry time frame eventually needs to be tailored to what the monthly time frame is saying. As simple as that. This is the best way to trade. Now, we have seen that we are medium term ranging. Let's move over to the daily time frame to see exactly what's happening on the daily time frame. So you can see as I'm moving from one level to the next. So this is called multi-time frame analysis, and it's my signature style of trading. On the daily time frame, you can see this market came right about here. So this market came right about here and rejected on the monthly zone and rejected twice here as well on the monthly zone too, and has come back to the downside. And you can see right about here, we've got 2 rejections as well on the monthly zone. So we are having 2 rejections on the upper part of the monthly level, and we're having 2 rejections at the lower zone as well. So that shows you clear cut that we have been ranging for a while. But have we broken out of the range? This is what the daily time frame will tell us, because what we are trying to do is to establish a trend that is in conformity with the original trend, which is bullish. Now, every other thing we are seeing are clues that the market is giving us as traders whilst we're scaling down from the monthly time frame to our bias or our entry time frames. Now, in this case, in the daily time frame, all I want to see is a form of realignment with the monthly bias. So the monthly time frame is saying that we are bullish. I want to make sure that every trade I place will be in alignment with what the monthly time frame is saying. So in this case now, I just want to see whether there is an immediate trend that shows us that we are in conformity with what the monthly time frame is saying, and we have that right about here. So after this market made this top here and came back and made this low, and then came above and made this top again, and then came back as well and made this low. This was the last low he made. And after this last low, so we now have a trend line right about here. So with this trend line in place, we can see that this trend is moving to the upside. So this trend is moving to the upside like so, and the market has begun to make characteristic movements of a bullish trend, which is in realignment with the monthly bias. Now in this case, this market now came and broke above our weekly level. So that's why we drew our weekly level in the first place. We've broken above our weekly level. We retested it right about here, like you can see, and the market is still moving to the upside. Now, all I'll be doing as a trader is to ensure that my trades, that I take trades that get me from this zone to this zone. So if you had come earlier on to catch this trade right about here, so we had a breakout here initially. So after this breakout here, what I usually do is to wait for a pullback. So in this case, there was a pullback. I wasn't monitoring this currency pair, so I'm just showing you guys in retrospect how I enter trades and the best way to trade. So all I would have done is to wait for a pullback. So that's what I always say, guys. Whenever there is a breakout of a level, do not jump on the trade. Wait for a pullback. They are like momentary stops in a trending market. So momentary stops that allow traders that know exactly where the market is going to be able to jump into that trade and ride the trend. So those are what pullbacks are. Pullbacks are not reversals. You don't count pullbacks as reversals. As simple as that. You only wait for them to give you a setup and then jump in. So after a pullback here, this is where I would have been taking my trades. So I'll pull back, I will be taking my trades here, and then now aim for the next zone, because I told you guys that the market moves from zone to zone. So ideally I would have taken my entry somewhere around here, and this is mostly how I would have aligned with this trade, because I trade from zone to zone. We'll enter there, somewhere around there, however it is, and aim for the next zone. So if I was trading USD JPY and I've been monitoring it closely earlier on, I would have currently been on this trade, and this trade is like a smooth 1:4. So if you're risking 3% per trade, this is going to give you a cool 12% return on investment. If you're risking 1%, then a 4%, which is still decent. If you're risking 2% per trade, this is going to give you a healthy 8 to 9% return on investment, which is passive. So this trade will all go into the upside. Now, if you missed the first entry, so if you made the first entry there, all you need to do, or all you need to have done, is to wait for this level that formed here. So this level formed right about here. So this is a daily level, and as a daily level, we'll mark it up as, you know, I've got color codes for my levels per time frame. So all I would have waited for, this is what I call the 100% retracement. The market, first of all, broke out, retested. Then first TP is going to be at the 100% retracement, which is the level that it began to retrace from. So after the breakout and then the retest, that level where it began to retrace from is going to be your 100% retracement. That is where you should take your first profits. Now, when you're taking profits, you lock in, you take out a portion of your profits and then allow the rest of the trades to run. So this is where I would have ideally taking my profits and then wait for a breakout above this level. Let's see whether we broke out above this level. Now we broke out above this level. So I'm going through this, guys, in this fashion up until when we get to the current market state to know exactly what the market is doing and know how to position our trades. You have already seen how I love to enter trades. Now, once we break above the 100% retracement, all I'll be needing is a retest of that level. Let's see whether it gives us a retest. You can see that we got a retest right about there. Cool retest. We'll jump into the 4-hour time frame, and that's how we take our trades. Now, currently, this is the current market scenario, and in the 4-hour time frame, let's see. So ideally, after a retest here, this is where you should have been aiming for to take your trades, and I'll be taking my trades somewhere around here. So I'll be taking my trades somewhere around there, and then aim first of all again, because it's created another 100% retracement. So we take out a portion of our profits here and allow the rest of the trades to run. So if you missed the first trade, which was this one, you shouldn't miss this one, because this one now did give you, this one now would have given us another opportunity to enter the market in this fashion and still aim for a 1:4. So if you aim for a 1:4 from here as well, you will lock in some profits here, obviously at the 100% retracement, and allow the rest of the trades to run. So when you're trading in this fashion, you will see that, okay, I'm just going to put this like this and then show you the first entry point, which we would have gotten as well, which was this. So the first entry point was here, which gave us a risk reward. Actually, on the 4-hour time frame, it's even more. Okay, so we'll be entering somewhere around here. Yeah, so this would have given us a risk reward of 1:4. For the first one, we take away some portion of our profits and wait for markets to break above that level and retest it, and then still enter again and still aim at the same monthly zone, because we're aiming at the monthly zone. Now, the second trade has also given us the same thing, if not more, a risk reward of 1:4, and we allow the second trades to run. This is how you stack up position. This is how you compound your trades and compound your profits. The best professional way to compound your profits is using this method. So currently now, the market has broken above the 100% retracement. If you were able to take this trade from here, kudos to you. You're actually trading well. Most traders don't see this, so I'm bringing it to your knowledge now. This is the best way to trade. I mean, I talk about it all the time. Even in the free masterclass, you're going to learn how to do these things the right way and trade properly. Now, USDJPY, undoubtedly, we are moving to the upside. So I'm just going to take this off down. So currently now in this market, if you were still not able to catch this trade here, obviously the market has sailed and also has beaten the 100% retracement. This is the same rules to apply. All you need to wait for is, so I'm just going to take this out now. So the same rule applies. I'll just draw this level right about here. So when the 4-hour time frame, you've seen that we have broken this level here. I'll color code it because I've got a color code for the 4. So all I'll need is a good retest around here, a good retest around this region to continue trading to the upside. Obviously, in the 4-hour time frame, we're going to, if we're able to get a trade here, we will even get a better risk reward. I mean, imagine having this kind of setup. So imagine having this type of setup where you are risking from this level and you're trying to catch your trades all the way to the upside. This is going to be another setup, and this is going to give you a 1:9. This is going to give you a 1:9. This is going to be massive. But the thing is, this particular setup, because you are zooming in and in, like now, these are your entry time frame. Don't forget to marry your analysis with the zones on your higher time frame. So in this case, you just move a time frame higher, like the daily time frame, to see exactly what the daily time frame is doing, because the pullbacks here need to look like this. You see, the pullbacks at this point needs to resemble these pullbacks. So you can see now that I will not be too optimistic to take trades from here because of this type of pullback. And the reason that this pullback you're seeing here is very small compared to this pullback. It's very small compared to this pullback. So this was the good pullback, the best pullback. It gave us time to pull back well. Then this one also broke above and then still, managed to rally around this area a while and give us time as well. But this one hasn't given us enough time. The market needs to actually breathe well. So that's why I'm going to be cautious about taking trades from here. And you're only seeing this, I'm telling you this now because ideally we'll need to go to the daily time frame to see exactly what's happening on the daily time frame at the current stage. But since we're on the 4-hour time frame, I'm showing you guys how to know exactly when to be ready to enter your trades. Don't enter the market prematurely. If the pullbacks are premature, do not enter the market. So for now, I see this pullback. I count this particular pullback because this is where we're currently in the market. I count this. So I count this particular pullback as premature, and I'll be waiting for more confirmation from the market before I add more positions to this trade. So ideally, what I want for me to be able to take this kind of trade confidently, so I'll take this out. I'll need this market to still move up like so, and then start pulling back, and start pull back all the way here. So when it pulls back all the way here, this is where I'll be ready to jump in. Now I'll be more confident if the market does this so I'll be more confident if the market does this, and because it is going to resemble this, it's going to resemble this in a way, than just what it is currently. So that's how to see the market from a professional angle and trade the right way. So that is it on USDJPY. We are long-term bullish, and we can see clearly even in the lower time frames now that we have realigned ourselves with the bullish trend, and we are taking this trade all the way to the upside. So the next target for USDJPY is 158.000. So 158 is what we are aiming for USDJPY. Currently, we are trading USDJPY at 154 basis points. So we are going to aim at 158 basis points at USDJPY. That's the overall target for USDJPY on today's analysis. So that's it. And did you enjoy the video? If you did, drop me a comment, a 5 comment as well. And if you've not yet joined my Telegram group, the link to join my Telegram group is right at the description of this video, or right in my bio. Just go over to my bio and join my Telegram group. And make sure you do subscribe to the channel. I'll be bringing you guys more insights like this on Forex charts and Forex related matters as well. And I'll be waiting for your comments, throwing your comments as to which currency pair you want to see the direction, so that my analysis will simplify these trades for you and allow you guys to trade the right way, which is from the market's perspective, the best way to trade. Now, if you want to learn how to trade, I've also got a link to my academy. It's right at the description of the video as well. Get yourself the right trading knowledge and trade properly so that you don't blow your accounts. I'm going to see you guys in my next video.